We're truly entering into historic opportunities right now. And the question is, where do you park your money? Where do you put your money? And in my opinion, one of the best places right now, probably ever, is uranium. And that's because billionaire Eric Sprott is stepping in with his trust. And this market is about to absolutely explode here very quickly. And to discuss that subject, we have Amir Adnani. He is the CEO of Uranium Energy Corp, who we've talked about on this channel. Full disclosure, I'm an investor in UEC. We've also talked about UROY, one of the first ever, or actually the first ever royalty company in the uranium space. He's also the creator of that company as well. So make sure you hit the like button on this video. If you're not positioned in uranium right now, you're going to want to watch this full video because this is going to be powerful and time is really starting to run out. So hit that like button, comment down below, go Uranium Go right there down below. We'll have the link to Uranium Energy Corp right there down below, uranium stock. So it's good to see you, Amir.
Hey, Jake, good to connect with you as well. This is actually going to be maybe the more exciting interview because there's some really historic things happening in the sector. I'm actually very excited about it myself as well.
Yeah, what drew me to the uranium market was just hearing the old stories, hearing Rick Rule tell these stories and some of his stocks going up 100. And you really just see when you look at the supply and demand, how sensitive this market is with how much is truly needed globally versus how much is being mined, the lockdowns and the effect that had on. And so it was so black and white, it drew me to it. But there was also no news of the most historic natural resource investor in the world, billionaire Eric Spott and his legendary companies, the Sprott companies, getting involved. And we're literally at the precipice of that right now. And I was wondering, what do you believe the impact that this is going to have on the uranium market, that Eric Spott will have on the uranium market?
Well, listen, we're seeing it live, literally every day since the beginning of this week. The takeover and let's say the implementation of running what is the only physical uranium sort of listed vehicle and really in North America, the Sprott Uranium Trust is now kind of running a program, an at the market equity program where they're raising capital on a daily basis, and then they're buying physical uranium. So we started this week, and I think the bid in the spot market was under $30 per pound. And already, as we record this interview, it's the bid has improved to $32 per pound. It's probably going higher. So you've had a 10% move in the commodity just in the span of 3 days since they launched really their active management of the program and the way they're proposing to do it. So this is historic. It's historic because the uranium market, the physical uranium market, going back to the very beginning, it was always a market where utility companies that buy uranium to run their nuclear power plants would show up only when they needed to buy uranium. Because remember, they're not actively looking to trade uranium. The end user wants to buy uranium, put it in a power plant, generate electricity. They're happy to buy once every few years, lock it up under a long-term contract. So the physical market for uranium for daily spot activity has always been super quiet, very slow, and a kind of a trade by appointment type of situation. This has actually been a source of frustration for a lot of investors that say, that are used to gold or oil or copper, where you can pull up an app and literally see the price move, every minute, every second. With the introduction of more financial intermediaries into the uranium market, the market became a bit more dynamic, but there's never been a buyer like Sprott. Sprott is a buyer who literally looks at, as evidenced by this past week, will be looking to deploy capital and buy physical uranium on a daily basis. Now we have a bid on a daily basis, and it's a bid that tracks the NAV of the Sprott Trust. So if the Sprott Trust is trading at an implied price of, let's say, $33, and the physical price is 32, Sprott will be able to issue equity to buy the actual physical at 32 because its own equity value implies a higher price. which in a way is the best kind of buyer because they're not necessarily price sensitive. They're not looking at it the way a miner would look at it. A miner will look at it based on the economics of a mine. A utility will look at it based on the economics of using the fuel to generate electricity. Sprott is literally looking at it as what is their share price implying for the uranium price? And that allows them to do one thing and one thing only, buy uranium. When they're not buying uranium, they're not doing anything else. They're never selling uranium. So you're either showing up and these guys are going to be buying uranium that day or doing nothing, either of which is a whole new dynamic in the physical uranium market. In the 17 years I've been doing this in terms of being an entrepreneur in the uranium sector, I've never seen a dynamic like this in our physical market. And colleagues of mine who have been in the business for over 30 years will tell you the exact same thing. It's such a game changer for the physical uranium market in a very positive way. And again, we're just a few days into it, right? So you asked me what I think, what will it do? Look, time will tell, but just a few days into it, and the emails and the apps are going. They've come to life, and we're in the dog days of August, and the physical uranium market has a tempo, has a life. It's exciting.
Yeah, honestly, I can't help but smile listening to you. Like, it's impossible to understate how powerful this could be, because the difference when Sprott gets involved in the silver market, obviously, it's so much bigger. The uranium market is so small, and you said in 3 days moved it 10%. That's absolutely incredible. And I wonder, how much can they really move this market? Like, I hate to say the word corner, but like that's basically what it seems like is going to happen, because there just isn't much uranium to go around. You would know better than me because your company, both of your companies actually, UROY and Uranium Energy Corp, both were buying. So the perfect storm happened where companies such as Uranium Energy Corp and many others, they started buying all the little amount of pounds that were above the ground. And so you got to see how thin that market is. So first, give us an idea. I think you guys bought 2.4 million pounds with UEC. How thin is this market, and how much liftoff power could Sprott's buying power, especially when they go on the New York Stock Exchange? They're going to be on the New York Stock Exchange as well. How much liftoff is that going to add into this seems like thin market? You know better than any of us, so please give us the inside scoop of what it's looking like.
Well, I think to understand why it's so thin, we just got to zoom out for a second, and we just got to remember that uranium is a depleting commodity. It's, unlike, let's say, gold or silver, and I'm a precious metal bull, and we can get into a debate about gold and its role as a currency, but uranium isn't a currency. Uranium isn't a jewelry. Uranium really just has one use and one application, and that is to be consumed as a fuel by a nuclear power plant to generate electricity. And in case you missed it, the world is consuming ever more electricity than ever before because of electric vehicles, because of anything and everything we do is so intensive when it comes to demand on electricity. And in case you missed this other thing, the world is also trying to decarbonize. And so the fact that nuclear power can generate immense amounts of carbon emission-free electricity is also another very important driver. And so if we just step back and put that in perspective, and remember that for almost a decade, we've been consuming more uranium than what we actually produce globally as an industry. And that commodities, are not just these bottomless things that you just kind of have an endless supply of. At some point, when you live off of any commodity and you consume more of it than you mine, you end up with structural shortages. And so today, the world consumes roughly 190 million pounds of uranium annually. Producing 135 million would be this year's number. And that kind of gap doesn't just change overnight. Why? Because there isn't one major new uranium mine under construction today. There hasn't been the construction or development of any new uranium mines really for the good part of the last decade. And so this is your classic setup in any commodity market where you've had just a very long period of a drought. And all of a sudden, all the forces and all the stars start to align. And that's what's happening in the uranium market today, where again, we're seeing very strong demand from nuclear power plants. Globally, there's this growth to want to see more construction of nuclear power plants, large ones, small modular reactors like the one that Bill Gates is doing and building in Wyoming. And again, then you look around and say, well, where are we going to get the uranium from? And then on top of that, you throw in Sprott as a commodity organization that's focused on commodities, gold, silver, platinum, and now they're coming into the uranium market to just buy and hold uranium. And you mentioned something interesting at the beginning of this with your intro. Every day for the last month, we keep hearing about the stock market at an all-time high, a new record high every day. The uranium price is really at 30% of its all-time high. And it's a commodity that is fundamentally used for something that we really need, electricity. And so how many asset classes, how many segments of the market can you invest in today where you're not just kind of trying to talk yourself into how you go from a new all-time high to maybe another new all-time high? Here you're talking about the price at $32 per pound being at 30% or thereabouts of its all-time high of roughly $140 per pound. And that's compelling. Like in terms of downside risk to upside exposure, that's a very compelling setup for the uranium price. So to suffice to say, the folks at Sprott who are very much commodity focused, they get this. They see that setup, right? And they're not just coming into the uranium market to throw their financial weight around and accumulate uranium here for no reason. They see a compelling opportunity. They're ultimately accountable to their shareholders, and they want to create a product that's going to be successful. And over the years of really having been very close to that Sprott organization with Rick Rule and Eric Spott and Peter Groskopf, the individuals that really run that, these guys have a very long-term understanding of the uranium market. They were there 20, 30 years ago, made a lot of money in the 06 and 07 bull market that we had. And they know what these commodity markets can do when, again, you have long periods of little activity. And now all of a sudden, there's a new period where demand is going to pick up. Utilities need to contract. And no one has a shovel-ready uranium project that they can just flick the switch and turn on and satisfy all that thirst and hunger that's out there.
Okay, so two parts to this. One, what did you see when UEC and UROI were buying and then talking to other people in the industry? I mean, how thin is this? I heard rumors that some companies had to go to many different sources and many different transactions towards the end of that buying spree. I just want to give us an idea so people understand this market's going to be gone pretty quickly. And so there feels like there's so much urgency.
Yeah. So look, when it comes to purchasing physical uranium between Uranium Energy Corp and Uranium Royalty Corp, no other company has acquired as much physical uranium as these two entities have combined this year. And so, yeah, we have a very direct sort of vantage point into the market. And I can look, there's things I can share in terms of how much we've disclosed and what we haven't disclosed. But I'm pretty sure I can disclose or say to you that we had to work very hard to put together or to be able to put together enough sellers that ultimately translated to the volume of material that we ended up buying, which again, between the two companies approaches about almost 3 million pounds of uranium. Now, to put that in perspective, 3 million pounds of uranium is how much uranium is needed, let's say, to run 6 reactors over 1 year. So each reactor on average consumes about 500,000 pounds of uranium a year, just on average. Some will be more, some will be less. Okay, so 6 reactors, what they would consume over the course of a year would be 3 million pounds. Just in the United States alone, there are 94 reactors operating. In the world, there are 440 reactors operating. And when you went, as we did, into the physical market to try to acquire enough uranium that only 6 reactors would need in 1 year, We had to go to multiple sources. We had to really, it was work. It was a real effort to do that. Now, and for those that are wondering why we did that because we realized that the uranium price at $30 per pound is basically lower than what the prevailing mining cost is globally, especially with inflation being a real issue and a real threat. To build new uranium mines, incentive prices are going to be well north of $50 per pound. And so when you can buy uranium, physical uranium, and just store it and put it in your account at lower than prevailing mining costs, at substantially lower than what the incentive cost is to build a new uranium mine, which comes with a whole lot of capital requirements and permitting requirements. Why wouldn't you do that? It's as good, if not better, than holding cash. You put it in your account and it's on your balance sheet for your company, and it sits there on your balance sheet as a current asset, as good as cash. And in fact, arguably, you can say better than cash because of the kind of upside value appreciation that it can have. And really, in our case, too, as a company that is waiting for the uranium price to go higher so we can start mining uranium, we're a former miner. We have facilities and operations with uranium energy to mine uranium. Having an existing inventory position means we can accelerate our cash flows when it's time to restart operations, because we can start by selling the inventory that we bought opportunistically at a very low price. And at $50 uranium, while our operations are revamping and ramping up and getting back into operational mode, gives us time. We can sell uranium over here from the physical position, again, accelerate the cash flow. And so that's the rationale for us doing it. But coming back to your question, it's not easy. There is to buy physical uranium. And if you want to buy anything of meaningful size, it's going to end up moving the market. And then there are utilities out there that will have to buy way more than 3 million pounds that we bought. That's, like I said, that's not going to power the fleet of 440 reactors in the world that are operable today.
Yeah, it really is incredible. I mean, just every time I hear the story and you hear the advancements and you really take a peek under the hood, it really is incredible.
Well, and the thing is, this is such a small sector. Most investors, most people listening to CNBC, most people following just what's happening in the broader stock market are not paying attention to the uranium sector. They might be paying attention to what's going on with nuclear power, because the utility companies that own and operate nuclear reactors are typically bigger. So you might be thinking about utilities, but those utilities are completely useless if they don't have uranium. If you don't have uranium, you're not going to be able to run that nuclear power plant. You can't put zinc in a reactor that's running on nuclear power. You need uranium. But our sector collectively is too small to really get the attention of probably the broader market. That introduces potential inefficiencies in how the physical market trades, or how even the uranium equities and stocks trade, or might trade, for example, with oil. Like today, as you and I speak, this is fascinating. I just mentioned to you earlier that the spot uranium price, due to Sprott's entry into the market, is up almost 10% in 3 days. Meanwhile, the uranium stocks are down big, almost 20-30% during the exact same time frame, because because energy is off. The energy sector is selling out. Why is energy selling out? Oh, because oil is down. What does that have to do with uranium? Oil is not a substitute for uranium. Uranium is not a substitute for oil. But in a market today where passive investing is such a big part of the market, and there's ETFs and passive investors, and people just bundle things together and trade them, you get these dislocations where our underlying, the most important data point for any uranium stock is the price of uranium, the spot uranium price. And this week it's on the rise, and the equities are on decline. And that's a market that is obviously not very efficient, not very well followed. People are not listening, not paying attention. But most people don't even know where to go check the physical uranium price, yet alone measure the fact that it's up 10%. So these are the nuances, and this is what's attractive, I think, to someone like yourself or your audience who are digging deep and going into the weeds, focusing on a sector that does have those sort of, let's say, nuances around it, but you can translate that into an opportunity and really an advantage.
Look, I'm just trying to hit a home run, and this one seems like a home run to me. Um, Rick Rule, who you know very well, and he's an investor and has been an investor in Uranium Energy Corp and in Uranium Royalty Corp and your gold stuff. So you've known Rick for forever, right? And you know Rick's very careful with his words. And so I've always, before any of this stuff happened with Sprott, I always felt like this was a home run, and I feel like I'm swinging for the fences right now. And he would always say, yeah, but I don't know if it'll ever be like the last one. And the fundamentals could get pretty good, but come on, it was pretty good last time. There's no way. And I wonder how you think Sprott getting involved and then peeling back the layers to see how hard it is to buy. And the fact that politicians and governments, they're going to get their pants lit on fire. They're not ready for this important thing not being available. It just seems like so much is stacking up. How do you think this is going to stack up versus the previous one where the price went to 140? Rick's got his legendary stories. The stock's going up, 100x. How do you think this will stack up? And I know there's some things you can and can't say, but how do you think, just honest, straight shooting, when you're looking at this market with Sprott being involved?
Well, look, I was there. I was there right at the get-go in the early days in 2004, 2005. Uranium was lingering, below $20 per pound. It was really out of favor. And all of a sudden, we started to get a narrative around the nuclear renaissance. And in 2006, 2007, we had this epic bull run in uranium prices going from $20 to $140 per pound. And incredible amount of wealth was created. And that's why I think many people today are fascinated by the sector, because of just how much wealth was created in 06, 07. I just want to put a bit of perspective here. In 2006, there was a treaty between US and Russia called the Highly Enriched Uranium Treaty that dismantled Russian warheads, provided highly enriched uranium, turned it into low enriched uranium, provided uranium into the uranium market. On the supply side, that was the equivalence of 18 million pounds of uranium annually hitting the market, which actually made it it would be the equivalence to the largest uranium mine in the world.
Wow.
So on the supply side, you had this big chunky source of supply that was available, that was coming in the market. And it kept coming into the market until the end of that treaty, which was 2014. So today, when we look at today's market versus 06, we don't have the same source of secondary supply in the form of dismantling Cold War era weapons and getting uranium out of them as we did in 06. Number one. Number two, the bull market in 07 was somehow capped off when the Department of Energy in the US announced that they were going to sell uranium from government stockpiles. Fast forward to today. Today, the Department of Energy has the US Uranium Reserve, a program where over the next 10 years, they want to purchase 1.5 billion dollars of uranium, starting with the first purchase this year. Department of Energy is looking to buy uranium, not sell uranium. If you look this up, in 2005, 2006 is the year that Tesla as a company was incorporated. Now, that's interesting, because Tesla is an interesting, let's say, indicator of where we are today with electric vehicles, where we were in 05, 06. I don't think anyone in 05 thought that this newly incorporated launched company called Tesla was going to transform and give so much run for their money to the automotive industry. And the internal combustion engine, as we know, really seems to be in the rearview mirror. The push towards EV is so real, it's so grand today. And today versus 05, 06 is not even comparable. EV wasn't a thing in 05, 06. The other component of this move that we're in today is decarbonization. Decarbonization and the trends around ESG investing are so important, so imperative. They're causing boardroom changes at companies as big as Exxon. These are things we never saw in 05, 06 that underpin the longevity of why nuclear power is going to play a critical role in the energy mix. Total number of reactors operable today are greater than what they were in 05. Demand is greater than what it was. And in 0506, we had Cigar Lake, that was a brand new mine being developed that was going to come into production. Today, we don't have any significant new uranium mines under construction, eminently about to enter production. I just wanted to lay all that out, Jake, before I say that I'm more excited about the potential bull market now in uranium than 0607. Why? Because if I just said that, I might sound, well, okay, I'm talking my own book. I'm involved with 2 uranium companies. But follow the facts and patterns and figures of that comparison that I just outlined. Whether it's the narrative, whether it's the trends, whether it's the data, whether it's supply, demand, whether it's finally the point that we started this interview with, the existence of a daily buyer in the physical uranium market, the Sprott physical uranium trust that we have today that we didn't have in 0506. If you and I just going to make a column, 2-column, compare the 0607 bull market to what we're about to witness now, every advantage goes to the next bull market in uranium being potentially more profound and significant and long lasting than what we experienced in 0607 because of these reasons. And again, I think you can make a whole show around it, studying the big differences in where we were in 0607 and where we are today. So I'm a big believer in it. And look, I'm putting my money where my mouth is. I'm the largest individual shareholder in Uranium Energy Corp, largest individual shareholder in Uranium Royalty Corp. So I'm talking my own book, but I'm doing it with facts, and I'll debate anyone on this. And I think you'll see the facts, figures, and everything stands and can be scrutinized, but it will stand firm.
Yeah, it's pretty amazing. My good friend Justin, who runs the Uranium Insider newsletter, before any of this even happened with Sprott, he made such a compelling case to me that this was going to be a historic market. And it's been really fun to talk to him now and to talk to someone like yourself now that Sprott's positioned. And one of the things that when you look at it a little bit, governments sometimes are a little slow thinking, and they seem to be a little slow thinking. I think this idea for them to buy $1.5 billion worth of uranium, it might be a little late. What I think 90% of the US uranium comes from foreign sources. China has proven that they're very ahead of the game on strategic commodities, minerals, and there's just quite frankly not that much out there. And there's not a lot of uranium US companies. Now, I imagine every company, wherever they are in the world, there's a lot of good ones. They all have their own unique strategy to play this market, depending on geography, et cetera. Now, there's only a couple US companies, quite literally, especially ones that can produce in the relative near time. Maybe there's some other companies that own land, but they're a ways off. Is your strategy at UEC to develop a strategic partnership with the United States government, who is starting to wake up and realize that? Is it to form a strategic partner with the US, given that they've said that this 1.5 billion, I believe, correct me if I'm wrong, they've said that's going to come from United States mines. So is that the plan, given that this is a market, especially in the United States, that there's not much competition? There's a couple good companies and that's it. Most companies are not there. So is it to be a strategic partner with the United States?
Well, let's start with this, okay? There is no competition for what we do in the US. Why? There's currently zero uranium mining in the US. So when there's zero uranium mining, technically there's no competition. Okay. Number one. Number two, the United States remains the largest consumer of uranium in the world by a far margin. About a quarter of all operable reactors in the world today are in the US. The US consumes close to 50 million pounds of uranium annually, produces zero. Now, this should be and is a national security concern, an energy security concern. It should be a bipartisan issue that everyone should agree. In a day and age where supply chains of anything and everything that's vital, there should be some control or visibility over. We have zero control or visibility in the US over the supply chains that power our nuclear fleet, which, by the way, are responsible for greater than 50% of carbon emission-free electricity in the US.
Wow.
And those reactors are also the second largest source of electricity in total in the US. So this is really an infrastructure, national security, a supply chain national security matter in question. But the way we've designed and built our platform at Uranium Energy Corp for 16 years now, this is a company that has really taken a long-term approach to this business, to this industry, is our view is first and foremost is we want to be the lowest cost or amongst the first quartile costs in the industry globally. We want economics to really be the ultimate competitive advantage here. Due to the fact that our projects are in states like Texas and Wyoming, and they're in the US and on US soil, including our inventory, the entire physical uranium inventory position we've assembled is sitting on US soil. We are not only an ideal supplier and a strategic supplier to the US government, but also to US utilities. But our business doesn't start and end. We don't want to take advantage of our US presence to say, we'll just sell to the US. No, we want to be, and we are a competitive producer globally. And the reason why we're competitive, and this is again, after 16 years of investing in our platform, is we've elected to develop and look to mine in situ recovery projects. These are solution mining projects for uranium, which is a completely different value proposition to conventional mining, which is hard rock mining. And you don't need to look any further than the country of Kazakhstan, where by focusing on the in situ recovery method, 15 years ago, they've gone from being third, fourth largest uranium producer in the world. Today, they're the number one largest uranium producer in the world, all with the in situ recovery method. They dominate the market. They're 42% of production share. So where Mother Nature technology and know-how can all be combined, this method of uranium mining has shown to be really the way to go and really a superior way of production growth. That's why we focused on it. That's why we've developed really a team, a suite of assets, a processing plant, really the human capital that understands this technology and geologic settings in Texas and Wyoming that are amenable to this type of mining. So we are going to focus on that first and foremost to be that low-cost, competitive, and reliable uranium supplier. And guess what? When you're a low-cost, reliable uranium supplier, you're going to have lots of customers in a world where we consume more uranium than we produce. You got the US government wanting to buy, you got the Chinese government wanting to buy, you have US utilities that need to buy. You're going to have many customers. And that's the way we're positioning Uranium Energy Corp.
From a national security perspective, to me, I feel like as an American citizen, there's quite a few obvious holes in the boat. One being internet security. Then if we have this much uranium that we need, there's many of these rare earth minerals, and there's also food supply chains. There's a lot of holes in the boat. And I wonder, and normally, you'd say, oh, well, we'll just produce more uranium. But the fact that these things aren't even going to be economical till we get at least $50 uranium, there's still only so much produced. And the fact that China is seemingly so aware and is buying up all types of important things around the world, they know how short the uranium market is. And unfortunately, I feel like on a purely bipartisan perspective, politicians on both sides of the fence, maybe it hasn't hit them quite as well. We know how strategic of thinkers China is. And I wonder, is there going to be a point, do you feel, I guess two parts to this. One, has the Department of Defense or the Department of Energy directly reached out to you to really grasp the importance of this market? And two, do you anticipate a point where they panic and then basically try to lock up anyone in the US with 100% of their production out of a national security issue?
Listen, first of all, we can look at history and see that the same panic set in the 1960s and 70s, and the US government really went aggressive in acquiring uranium mines, physical uranium. And that caused its own bull market, which predates 06, 07, obviously, and really led to so many developments of uranium mines in the US that by the early 80s, the US was the world's largest uranium producer, producing almost 40 million pounds of uranium. And again, that was driven by US government purchasing to build strategic national stockpiles. Fast forward to today. First of all, I fully agree with you about just anything to do with politics and politicians, makes you just you lose hope. Things move slow, and we all know how nasty politics can get. For what it's worth, nuclear power and uranium mining does have bipartisan support and enjoys that, which is rare. Number one. Number two, our company in particular, the chairman of our company, Spencer Abraham, is a former U.S. Energy Secretary. There isn't another uranium company in the U.S. or the world that has a former U.S. Energy Secretary as chairman. That has meant that over the years, we've had the credibility and ability to really have regular dialogue with the Department of Energy and have a very solid presence in the Capitol and in Washington and in DC. The executive VP of our company, Scott Melby, is the president of the Uranium Producers of America. That's our industry association. And that industry association speaks regularly to the Department of Energy as recent as last week. And so we are very much on top of it. In fact, I don't think there's another US company or company that is as well positioned as we are, with very much a very respected team of individuals that have served in prior administrations, that have really been and seen this industry through multiple decades, that are there today. And the view, and what I would say to you is that there is a strong sense of urgency at the Department of Energy today to first and foremost support nuclear power, support innovation in the field of small modular reactors, where the US really wants to lead the world when it comes to that. And that's a very promising area when it comes to nuclear power and nuclear technology. And then finally, and very importantly, this shortage of uranium and the fuel chain, uranium conversion enrichment. The whole fuel chain is missing, and it needs serious kind of reinvigoration in the US. And that's also another top priority. Look, for what it's worth, those things are all there. Now, someone who might be, let's say, very pessimistic about government action might say, oh, whatever, we've heard this before. But I can tell you, like in the 16, 17 years, I've been directly involved as CEO of a US uranium company. I've never seen this level of bipartisan support. I've never seen the kind of programs they're talking about launching, like buying uranium. The last time the US government bought physical uranium, again, you got to go back to the 1960s, 1950s. It's quite rare, but it's happening. And even if it takes an extra 6 months or a year, if you think long-term with this, the reality is long-term, the key is that the US has gone from previously looking at selling uranium in 06, 07, they were selling uranium from government stockpiles. And today, any way you cut it, moving forward, they're looking at replenishing their government stockpiles. And that to me is really a shift. That's a paradigm shift in how they view it, they being the US government. Now, will they end up nationalizing things and all that crazy? I mean, Trump got pretty darn close. I mean, there was a trade action that was launched during the Trump administration that looked at introducing possible tariffs and quotas. It got very close to possibly passing. So I don't know. You never say never to anything. But the reality is that uranium is a very strategic metal and commodity. It really is not only needed for power generation, but the entire fleet of the nuclear navy, when it comes to aircraft carriers and submarines, runs on nuclear power. Microreactors that power the nuclear fleet of the US Navy. And that all needs US origin uranium by law. And I'm not talking about waging war. We're just talking about just the regular maintenance of going around, patrolling the waterways of the world requires nuclear power, requires US origin uranium. So I think uranium is really, it would be an understatement to say it's a strategic metal. It is probably the super strategic metal because of the two very key roles that it plays in defense and in energy, and the energy that it helps generate, being electricity in a world that has to decarbonize, could not be more timely and more relevant and integral to the role that it has to play.
Yeah, that's it just seems like every single thing that could be talked about with this market just kind of like, it gets me, makes me want to do some push-ups, because it's like you see how small this market is. Now, I guess the other thing that I strategically think of is we're not going to see these prices for much longer, and they're going much, much, much higher for much, much, much longer. Is there anything that UEC's looking at as a last resort to buy soon? I mean, I know you've kind of made a lot of your success in mining by strategically buying things during bear markets. I know you did the same in your gold and silver precious metals markets. I know you also bought during lows with uranium. Is there anything else that looks worth scooping up here, or in the United States or elsewhere, before this market really takes off? If not, what's the outlook, and what are your goals moving forward with UEC as we wrap up?
Well, listen, I mean, as you pointed out, using gold as an analogy, right? We were at Gold Mining, another company that I founded, that I'm the chairman of. For about a decade, we were patiently and consistently, year in and year out, acquiring resource stage gold projects when gold was around $1,100 an ounce. It took basically 1 year last year, right? And we saw the gold price jump to levels we actually didn't think would happen that fast, right? As you know, we got over $2,000 an ounce. Gold back now, it's around 1,800. When you get those types of moves, it becomes impossible to find those types of 10 cents on the dollar type acquisitions. They just disappear. And so as a result, our strategy at Gold Mining changed, and we pivoted, and now we're really unlocking value from this tremendous and immense portfolio that we acquired. Applying that same rationale to uranium here for a second, we have been at Uranium Energy very much a buyer of uranium assets and physical uranium over the last decade. And doing it where, in my mind, $30 per pound of uranium is not even analogous to $1,100 gold. It's analogous to $800 an ounce gold. So if you could be acquiring gold projects at $800 an ounce, if you had a contrarian bet and you believed in higher gold prices, you would do that. If you apply the same mindset here, $30 uranium is, in my mind, as an entrepreneur, it's a gift, because we are able to take advantage of the fact that we see, and look, our belief system is very open, right? Our belief system is that these prices don't make sense. Uranium prices are going higher. Demand is there. You can shoot holes in that all day long and disagree with us, but we have a certain orientation in our belief system as a company. And we're trying to execute that. So in that sort of system that we have, our view really is that this is an incredible moment in time to continue to build a platform, which our company has, that we've built over the last 16 years, continue adding to it. Many of these projects or assets or even physical uranium we bought, as I mentioned, we believe we're buying below fair market value, below where we think future prices will be. We've had a number of acquisition opportunities that really look like they were 10 cents on the dollar type acquisitions. I believe at $30 uranium today, there are still opportunities. You have to be disciplined. You have to be astute. You have to be connected. You got to know the market to obviously execute. And clearly our company's been around long enough, and we have the team and the people to do that. We've demonstrated that. Along the way, we've also launched Uranium Royalty, which to me is yet another way for us at Uranium Energy to really benefit from the royalty model and apply that to many, many more assets that we wouldn't be able to buy. For example, Cameco's Cigar Lake McArthur River. These are incredibly world-class assets. They're not for sale, but a royalty on those assets was for sale, and we were able to buy it. So now, indirectly, you have exposure to world-class deposits through the royalty structure ownership. And of course, it's nice not to have to, as a royalty owner, worry about capital expenditures and operating costs and inflation, and all that stuff is the problem of the miner. The royalty owner just collects a percentage of the top line. So all of that to bring it back and to answer your question is I'm still bullish. Our actions as a company with both Uranium Energy and Uranium Royalty demonstrate, if you look at our news releases year to date, year over year, we're buying stuff, whether it's physical uranium, royalties, properties. We continue to just believe that this is the time to continue to build out the platform, keep building out the assets, and we're going to continue doing that. And again, in a very disciplined manner, and where it makes some kind of strategic sense for us, we're going to continue doing it.
All right, powerful conversation. Anything else that I've missed? Anything else you think is important as we wrap up?
I think I would love to reconnect with you in a couple of weeks or even sooner to talk about what you and I identified as historic this week with Sprott's entry into the physical uranium market. I really believe it's historic. It'd be fascinating to see how it evolves and what changes we see in the uranium market, especially because the summer doldrums are approaching their end. Uranium markets also have historically been very slow, and in the middle of the summer, where the utility guys are on vacation and taking time off. I just think, bringing it back to the first comment you made, this truly is a historic week for the spot uranium with Sprott's entry into it, and it's. I'm just very excited and interested as well to see how things develop from this point on. So really look forward to kind of taking the temperature of our own thoughts, looking back at it. We can play Monday morning quarterback a few weeks from now or a few months from now and see how it all plays out.
So if you think you'd love to see something discussed and you're listening to this video right now, give us a comment down below with your question that we can ask Amir on a next episode, because I think this market's going to move really quick. There's going to be a lot of great things happening very fast. So if you'd like to see that, you can post your question right there down below. We'll go ahead and pool some of those top questions. Right there down below is the link to UEC website, traded as UEC as a symbol, and UROY will put down there right there below as well. Make sure you hit the like button on this video, comment down below, go Uranium Go. If you comment down, go Uranium Go, it's going to help Eric Spott get some extra juice to keep buying that uranium price and moving it higher. And we want to thank you very much for coming on and give us an inside peek, Amir.
Thank you, Jake. I appreciate it. Take care.
Awesome.